All right, let's go. So tonight we are just going to be looking at accumulation and distribution. Accumulation and distribution, right? So the goal of this entire thing, right, is to make trading as simple and uncomplicated as possible. All right, and that's why this was put together. All right, I have come to realize that we can simplify things as long as we want them to be simple, as much as we want them to remain simple. All right, so the goal is to keep it as simple as possible and making the most profit out of it. All right, not complicating it, not adding so much of drama to the whole thing. Yeah, but it's just to make it simple as possible and most profiting as it can be. All right, so are we ready? If you are ready, drop your 111s in the chat. Let's go. If you're ready, let me see your 111 and then I dive in. So please follow me because it's going to be a very long ride. All right. Okay. Thank you guys. All right. So accumulation and distribution. Basically, I don't want you to feel like, oh, this is so big. Accumulation, what's distribution? Now, no, just relax. We are going to take it step by step. Okay. And then the purpose of all of what we have been going through over the past few days is so that we can plan our trading edge. We can form our trading edge. We can have all the things that we need, precept upon precept, and then we don't jump the process. All right. Coach Solomon taught us on market structure. Coach Tony taught us on introduction to smart money. Coach Musti came, gave us a banger yesterday with King Order block, banker blocks, and all those smart money plays. All right. And we are using all of this to get entries. All right. To get entries, to know where to get our entries, when to enter the market, because we don't want to enter at the wrong place so that we won't lose our account or blow our account. And as much as possible as we are entering, we also are looking for that very tight stop loss, minimal stop loss, and then increase our risk to reward. So more like you are risking, say, if you are risking a $10 per trade, you are looking to get in a $30, and then you want that stop loss to be very, very small, such that by the time price is hitting your target, it's giving you, more than a 1 to 3, it's giving you a 1 to 4, it's giving you a 1 to 5, and all those good stuff. That is the whole essence of what we are doing here. And this topic is to help us. Basically, it's all about, I will use the word lower time frame entries. All right. Well, you may want to call it scalping. You may, well, I really, I'm not here to downplay anything, right? But then for me, it's just trading is basically all about risk management, right? Your risk appetite, keeping your risk very minimal and increasing your reward. All right. So let's not waste much of our time. So I'm going to start from basic price action, right? I'm going to start from basic price action. So in a bullish structure, we have price creating what? Series of higher highs, right? And higher lows. Okay. That's what we have in a bullish structure, right? Highs, higher low, right? And all that good stuff. Okay, so that's that. And then we also know that in a bearish structure, we have price creating what? Lower highs and lower lows. Please, guys, do not forget this, because we are really, really going to need all these things, right? Lower high, lower low, lower low. All right, beautiful, perfect. All right, so let's move. Let's go. So, and then we know that when price gives us a new high low, and then a new higher high, and then price comes and closes below the last below the last higher low, then we have what? A break of structure, right? So we have a break of structure here, right? Which means that this is an evidence that price, is ready to shift downward, right? All right, so now this is the evidence that we have, okay? And then we expect that price is going to, come back all the way. All right, come back all the way and then continue its downward movement. All right, now that is that is when we have a break of structure from a bullish structure to a bearish structure, right? Okay, so let's go. And then in a bearish structure, we have lower high, lower low. And when price closes above the last lower high, then we have what? A break of structure. Okay, then we have a break of structure, and then we would anticipate that price would come back here, and then give us a new high, right? Okay, so it means that in a bullish structure, higher high, higher low, higher high, and then break of structure, right? And then when price closes below this low right here, and price is on its way back, more like giving us that retest, you understand? And then comes all the way here and then goes down. Now, this entire thing happening here, right, is what we call distribution. All right, is what we call distribution. This that we have right here is what we call distribution. Okay. All right, this is what we call distribution. And then in a bearish structure, we have lower high, lower low, and then we have a break of structure, right? And price would close above this, come back to give us that retest, okay, and then continue its move up. This is what we call accumulation. All right, this entire move right here is what we call what? An accumulation. All right, are you still with me? If you are still with me, drop a 111 in the chat. Let me know you are still with me. All right, let me see the 111s. Okay. All right. So this is what we call both an accumulation and what? A distribution. So if you have a question, you can just pen it down. I'll answer questions. I'll take questions after the class. All right, thank you guys. All right, so let's dive deeper. Okay, let's dive deeper. Let me remove all of this. Just a minute, guys. All right, so it means that when in a bullish structure at highs, okay, we get that break of structure. All right, we get that break of structure. So what then is accumulation? Accumulation is, what then is distribution? Distribution then is when you have, price break structure, right, from bullish to bearish, and then you would anticipate that price is now giving you that evidence of continuing to the downside. That is what a distribution is, all right? And then accumulation in a bearish structure, you would expect that, once price breaks the last lower high and then it comes back, it gives you that evidence that price is now ready to continue in the bullish structure. So here we would just expect that price creates a low, right? Give us this lower low, then lower high, lower low, and then just continue in that bearishness. All right, and then price will just continue in all of that bearishness. So what we have here, what we have happening all around this area is what we call distribution. And then for the bearish structure, like I said, all right, and then price comes all the way back and is giving us that bullishness. This entire play right here, all right, right here is what we call what? Accumulation. All right, that's what we call an accumulation. Okay, so now let's move. Let's go in deeper. All right. Has anybody ever heard of the saying price is fractal? Has anybody ever heard of it? You've probably heard price is fractal. Let me see you. Drop a 111 if you have heard it before. Price is fractal. Have you heard of it? Okay, yes. All right. So now I'm going to use the fractal nature of price, right, to explain how your daily time frame is in sync with your H4. Your H4 is also in sync with your H1. H1 is also in sync with your M30, with your M15, even down to your M1, your 1 minute time frame, right? All of these time frames are in sync. All right, all of these time frames are in sync. So when you're looking at the weekly time frame, what you have on the weekly time frame, when you go down to a much more lower time frame, say maybe a 1 hour or a 15 minutes or a 30 minutes, you would also see a complete reproduction, a complete replica of what you had on the weekly. You would also see it on the lower time frame. So when we understand this is how we are able to, merge time frames together, and we can have a weekly POI, and at the end of the day, we are taking our entries from 5 minutes, from 15 minutes, or from the 1 minute. All right, because what price is fractal. All right. So before we go into that, let me quickly show something on price cycle. All right, the cycle of price. Okay, so if we have this is a price cycle. Now, this is where price is coming from. We don't want to be selling at extreme lows here because it doesn't make sense to sell, right? It doesn't make sense to sell something when the price is very low. It makes sense to sell when price is here, all right, at this very high, and that's why you will hear people tell you, sell high and buy low. It's not just a mirage, it's not just a cliche, right? Imagine that say you want to buy an iPhone, right? iPhone 13, right? iPhone 13 is I think around 890,000, if I'm not mistaken. So iPhone 13 just came out, and then boom, you want to buy iPhone 13 at that price. All right, it wouldn't make sense if I buy iPhone 13 at 890,000, right? And then maybe my friend now waits a little bit, and the price of iPhone 13 comes down to say, let's say 750. If he buys iPhone 13 at 750, is he profiting more than I am? Of course, yes. So if you can relate Forex to your daily, your local market, your day-to-day activities, it would make a lot of sense. All right. So you don't want to be buying at these highs here. Now, buying at these highs, for me, this is how I filter the trades I will take. Okay, these are low probability trades for me. I really want to buy from here, right? Buy when price is low, all right? And right price all the way up, so that I can maximize my profit. I can make a good returns for my money. All right, at this point, when price is dumping, this is where a lot of people are afraid. So we are buying the fears of people. That's what we are doing right here. We are buying the fears of people down here. And then a lot of people at this extreme, and that is when they now want to begin to sell. And you just see that instead of price to sell, price is now, pushing up. You get that, fam? So this is basically price cycle. I don't buy at extreme highs when price is very, very high. I want to maximize my buys from these lows. Okay, and then my sales, I want to maximize my sales from, these highs right here and ride them down. Once price is at these extreme lows, they are low probability trades for me. Now, this that I've just explained is an answer to some people's question. So how do I know when to buy? How do I know, and all of those things? Now, this in itself is going to teach you one out of many things: patience. So maybe, for example, A minute. Let me just clear all of this. Okay. So maybe, for example, right, this was what price was doing when you opened your chart, right? Higher low, higher high, and then this was it. You won't just rush and then take your buys here like Coach Tony thought and Coach Solomon. You won't just, price is buying, let me buy. No, you want to wait. And then remember our class on discount zones, right? You want to wait for price in that discount zone, but that is not enough. Coach Musti, Dr. Staffarian told us at your structural points, you are looking for smart money plays and all of those things. You get that smart money play here, but is that enough to enter? Well, for some people it's enough, but for this class, the purpose of this class, we want to see how we can, in this entire area, find a stop loss, a trade or an entry that will give us a stop loss as low as 8 pips, as low as 4 pips, as low as 10 pips. All right, that is what we are looking for. That is what we want to do. Okay, so now, like it's our custom, I like to do this. So let's go and see what the definition of the fractal nature of price is. All right, so let's zoom in a bit. Now, what does it mean when we say something is fractal? A curve or a geometrical figure, right? Each part of which has the same statistical character as the whole. All right. Now, this is not an exam. You're not doing this because of exams, right? I just want to sink something into us, right? They are useful in modeling what? Structures, right? In which similar pattern occurs or reoccur at progressively smaller scales. This is what it means, right? This is what we mean when we say price is fractal. So now if I have, let's go. So if I have higher high, higher low, higher high, higher low, higher high on the daily time frame, this tells me that on the 1 minute time frame, I would also have higher high, higher low, higher high, higher low, higher high on the 1 minute time frame, guys. Do we understand it up to this point? If I have structure on higher time frame, I also have structure on lower time frames. So my understanding of this is what now makes me get my point of interest on the higher time frame, right? And then go to the lower time frame and look out for that same structure and then plan my trade. Okay, so now we understand what it means for price to be what? Fractal. So let's move. All right, let's move. I'm trying to keep it as simple as I can. All right, so let's now go to what? Okay, so all right. So in a bullish structure, we have higher low, higher high, and then a break of structure, right? Now, and I said when price breaks structure, we would anticipate, that price will come back all the way here, somewhere around here, and then continue in its bearishness. Now, it is important for us to know what exactly is happening here. This is the focus for tonight's class. What exactly is happening here? This area when price came to give us that retest, what exactly is happening there? All right. Now, since we know that price is fractal, now it means that when price is coming back here, now in this area, remember we said that this entire thing is what? Distribution. So when price is here, it is important that we also see the same thing, right? Higher high, higher low, higher high, break of structure again in this area. Now, this will happen here, or this should happen here. When this happens here, this is what we call a redistribution. Okay, I'll take that again. All right, let me take that again. So we know that all of this move right here, okay, all of this entire move right here is what? Distribution, right? Is distribution. Now, when price is coming back here, since price is fractal in nature, when it comes back here and is now ready to continue shifting to the downside, it is important that we also get this same thing inside of this area, right? Higher high, higher low, higher high, break of structure, right? This, since this is redistribution, then when this happens inside of this area, this is what we call a redistribution. All right, this is what we call a redistribution, and this is how we can minimize our risk and enlarge our rewards. So it is important that this same break of structure again back to the downside should happen here. And once that happens here, then we now have that further evidence or further confirmation that price is now ready to go in the bearish direction. All right, Mr. Emmanuel, you raised your hand. Don't worry, I'm going to take questions. Okay, I'm going to take questions after the class. Okay. All right. Now I'll take it again. Now, do we understand this whole idea of distribution here in a bullish structure, right? Drop a 111 if you understand that. Okay. All right. Now that you have understood the concept of distribution, right, in a bullish structure, now this same distribution here, okay, let me explain it this way. Many of us know what we call a break and retest, right? Yes, we know what we call a break and retest. So we expect that price will break structure, come back and retest. Okay, now what is happening when price is retesting that other block? Like we were taught yesterday, when price is coming to mitigate, what exactly is happening, right? And remember, we saw that the definition of fractal, and I said price is fractal. So it means that when price is coming back, right? When price is coming back for that retest or that mitigation, for us to know that price is now ready to go down in our direction, we want to anticipate that break of structure again, meaning another break of structure inside of our order block. Do you understand that now? We are looking for that break of structure again inside of our order block or your institutional candle, right? Or your institutional candle. Okay. So I'm going to take it again, guys. We understand it. Don't worry. Understand it. That's why we are here. Okay. So yes, on a lower time frame. All right. Now just relax, guys. Just relax. We'll take all of these things again. Now we know what a break of structure is, right? Also known as distribution, right? Distribution at highs, right? And then accumulation at lows. Okay. Now that we have seen a break of structure, and then price has broken structure, the trend is about to shift from bullish structure to a bearish structure, from bullish trend to a bearish trend. Perfect. All right. So like Dr. Stafarian taught us yesterday, when we see that break of structure, now we want to look out for smart money plays. Okay. Now other blocks, as you know it, institutional candle like Coach Tony taught us, right? Banker blocks, imbalances, smart money cubes, and all those stuffs. Okay. Now when price is coming back to give us that mitigation, if truly price is fractal, then when price is coming back all the way here, we should see this same break of structure that we saw here. We should see it again when price is here. We should see higher high, higher low, higher high, break of structure again. So what we now do is, when we have mapped out our point of interest, say on a higher time frame, then we now go to the lower time frame. And what are we looking for on that lower time frame? We know that there's a break of structure now. Yes, on that lower time frame, we are looking for higher high, higher low, higher high, break of structure again to the downside on the lower time frame. This is how your risk will be very, very small on the lower time frame. Now, two things I do is, probably because I've been able to train my eyes over time. All right. See, guys, structure is very, very important. Structure is very, very important. Now, let me show us something so that we can really, really understand these old jargons that I've been saying since morning. All right. So let's say this is what, let's say this is our daily time frame. Okay. So we have daily time frame. All right. So this is our daily time frame. Now, since price is fractal and we'll have structure on the lower time frame. Now, on the lower time frame, if we have this, it is important that we also have higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low in this whole expansion up. All right. And so when price is now about to shift, that is when we now get this higher high, break of structure, and then we have higher high, lower low, lower high, lower low, lower high, lower low. And when price is about to continue in that expansion, that move up to now give us the next bullish move, right? It is important that we also get that break of structure again as an evidence that price is ready to continue. Now, this is what happens on your higher time frame and also your lower time frame. All right. Do we understand this that I just said? This is just structure. It's nothing complicated, guys. What you have on daily time frame, you also have it on your lower time frame. So in both your expansion move and your contraction move, you would have structure inside of it. All right, beautiful. I like that. So in this, you will have higher high, higher low, higher high, higher low. You just keep having it like that. Break of structure, lower high, lower low, lower high, lower low, lower high, break of structure, higher high, higher low, and then it just keeps going back and forth like that. All right, it just keeps going back and forth, back and forth, back and forth. All right. So now, when price has given us a new, right, higher high here, we have marked our, our structural point. Now price will be coming in that bearishness. So we want to see price shift again. All right. We want to see price break structure again. That is what we call a reaccumulation. All right. A reaccumulation. So let me now go back, and maybe now we would understand this whole idea. So I saw this higher high, higher low, higher high, break of structure. All right. And then if price is coming back into to give me that retest, what structure, can someone tell me the structure that price will be for me, both on the lower time frame and on that time frame? Can someone tell me if price is coming to give us that retest? I want to see if we are able to catch up. Beautiful, 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 beautiful. Bullish structures. You guys are getting it. You guys are getting it. So when price is coming, it's giving us this. It's giving us this, giving us that bullishness. All right. So when it now gets here and we see this break of structure again to the downside. All right. Again, this that happens here is what we call a redistribution. Right? Remember, this is what this that happened here is what distribution, and then when it comes for that retest, this distributed again. That's what makes it a redistribution. All right, drop some fire emojis if you caught that. Drop some fire emojis if you caught that. All right, let's go, let's go, let's go, let's go, let's go, let's go. All right, amazing, 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 amazing. So this is what happens in this area. Okay, this is what happens in this area. So naturally, the way you would have seen it on the chart would just have been higher high, higher low, higher high, break of structure, and then price will just retest and continue down. But then in this place, there is something that happens inside of this place. Now we'll go over to the chart and look at chart examples. Okay, this that happens here, we want to see that higher high, higher low, higher high, break of structure again in this area. This is to tell us that okay, now price is ready to shift. Because now let me show you something. Some of you guys would have been victims of this. Man, you guys are in for something. Okay, so we would see a break of structure, all right? And price will just continue higher high, higher low, higher high, higher low. Continues like that. And then you have marked this as your point of interest. Oh, and then you now see price just continue going up. Has it ever happened to anybody? Drop some fire as if you have seen that happen to you. Like, I mean, you would say, oh, but I saw a break of structure. What? I should be in this cell. This cell should no. And we say, oh, derivative manipulated, or this, or that. Now, the truth is, price has the final say in the market. Now, because this broke structure does not necessarily mean that price would go in this direction. Price can continue this bullish structure and violate your POI, or price will just continue dumping and not even come back. Then it will now take many days before it now comes back to your marked out point of interest. I mean, let's just fill in the chat box with some fire emojis if this has happened to you. This is your answer that you have been looking for, guys. This is your answer, right? So price can decide to continue like that. So now let me just go ahead of myself a bit. Let me go ahead of myself a bit. I'm going to remove all of this. So I have marked this, right, as my what point of interest. Okay, like I'm going ahead of myself, but the things I have for you guys is inexhaustible. So I'm just going to try my best, and wherever I can stop, I would stop. Okay, so I have this, and then when price comes here, you know, I wait for that, boom, break of structure again. All right, now I can decide to, you know, enter when it's coming here, right? Or I can decide to still wait for the same signature, higher high, higher low, higher high, break of structure. When it sees breaks, I set my limit, set my stop loss, and I just wait for price to do its thing. I mean, imagine that your entry somewhere around here, your entry somewhere around there, and your stop loss, and then, I mean, 1 to 5, that's beautiful already. Just on understanding the fractal nature of price and understanding that redistribution, reaccumulation they are very further things that you need to put into your checklist. Now, I'm going to show us examples, failed examples, right? Coach Musti, Dr. Stafarian, pardon me, was talking yesterday about inducements, all right? Now, one of the ways that I avoid it, except I don't check well, now everybody takes losses, so don't think about it. We all take losses. So you would see price do this, break structure again, right? And then probably as entry with a limit order, you set your limit, stop loss, and what will price do? Price will still come back and continue upward, right? Now, this is the reason why I love reaccumulation and redistribution. Once price gives me this break of structure again, I will not enter. What am I looking for? I'm looking for the same signature when price comes here again. Higher high, higher low, break of structure, Q, and then I can set my limit, stop loss, and then I'm looking to take the trade. Do we understand that? Let me know if you understand that. Now, that exactly is the concept of reaccumulation and redistribution. So now let's go over to the berry structure, right? Gives us a breakout structure. Okay. Now we also want to see that just a minute. Okay. All right. So we also want to see that lower high, lower low, lower high, lower low, lower high, lower low, breakout structure. All right. Guys, please do me a favor and just write your questions down. Right? Just write your questions down. Like, I have a lot of things I want to say, and at the same time, I want to explain well so that we can understand. Okay? So we want to see that this right here is what we call a reaccumulation. A reaccumulation, because price can decide to continue in that bearishness, lower high, lower low, lower high, lower low, and just continue selling downwards. All right. So the fact that I see a break of structure like this does not mean I just enter. No. And if you are not patient, if you have not learned patience, you will be in a hurry. You may not have the patience to wait. Okay. So I hope I'm not lost in a lot of people. I hope I'm not lost in a lot of people. But then, so one last thing before we go into chart, so that I can really put things in perspective, and then we go into the charts. Okay. Now remember that we talked about Coach Tony talked about smart money, the top 10 participants, you know, JP Morgan, Sachs, the Deutsche Bank, and the likes, right? Now, if they have the price to move the market, now an example, a very good example for those that trade currency was today. There was less of movement in the market. If you check, price was just dancing, no serious movement. Now, and that was because we have bank holidays. Today was bank holidays. Now, if those big guys were on holiday and then price didn't move necessarily, then it should send this message to us that there are some people that really actually move price. Right? There are some people that move price. Now, imagine that you are the guy with the big money. So you want to buy, let's say you bought with, let me use this. Let's say you bought with 250,000. Yeah, I'll go to the chart. All right. I have some examples for us. So you bought price with, let's say you bought USD card with 250 million or 80K lot size, right? And then after buying, some big guys pumped money they sold down, right? When they now sold down, then another order was opened that created this move. All right. So let's say they bought 80K lot, 80K contracts. All right. So let's say they bought 80K contracts, okay, and then they sold with let's say 40K. All right. When price got here, they now bought with another 100K. Okay, they bought with another 100K. Now, like Coach Tony thought, if you were the one and you were on drawdown, what would you just want to do? You just be praying that price should, maybe just come to your entry exactly, and you can close so that you're not closing loss. You just want to close because of the drawdown, or you want to close at say 50%. All right. So you're expecting once price comes to this open here, or the 50%, you're what? Ready to close. All right. So this is what you'll be doing. Now, this is how I see the market, right? Smart money bought, sold, bought again. Now they are selling so that they can close their position. These their sell orders that are in drawdown. Once they close these sell orders, they add on more buy positions. And that's just what they do. Once they close, they add more buy positions. They sell down to close these previous sell orders. This previous sell here, they just sell down, close again, buy up. Now, this sell is still in drawdown. They need to mitigate all these things. Now, can you see why we thought all these things the way we did, so that you can further understand? And these guys, trust me, smart money know what they are looking for. So that's why sometimes they can they can give you this break structure, right, and continue again and violate this your POI. They know, so they can give you that. They can give you that break of structure. They know that's what you are looking for, right? They know. Like these guys are not. They are wise. They know what you are looking for. So I would just be looking to close, open, or 50%. Now you see where the theory of open and 50% of a candle comes in. Can you see now? They just want to like close just in break even or in a little profit. All right. So they buy again, and then they are looking to just 50%, or the open of that move is enough. All right. And when that is happening, what is happening on lower time frame? Higher low, break of structure, and then it continues like that. It just continues endlessly. Right? It continues endlessly. Do you understand that now, guys? I don't want to go so I don't want to confuse a lot of people, but let me just keep it as simple as this. All right. So let me take questions before we go over to the chart and see. All right, let me just quickly take questions. All right, you can just type your questions in the chat box. Any questions? Any questions? Any questions? Type your questions, guys. Let's keep it coming. Let's keep it coming before we go over to the chart. All right, everybody understands, right? Okay, this accumulation. Yes, sir. Okay. All right, so now, see, that's why I said, my mentors and the other facilitators told us something. We are not coming here to downplay any pattern or strategy that you might have known. I should summarize it. Okay, any pattern that you might have known, but we are just only opening your eyes to deeper things that happen in the market. So yes, it looks like the reversal pattern that or those things, but then beyond that, what we are looking at is structure. AMD, okay. All right, so I'm going to begin to answer the questions one by one. So what we are looking at basically is structure, right? So when price is coming back for that retest, you know, whatever, because these things is money, right? It's money. And that's why we look at it from the standpoint of the guys that move the market, how they do it. Okay, so when they are coming back, instead of us looking for, you know, all those shoulder and head, you know, all those things, they work. We are not downplaying them, but I'd rather view them in terms of structure. I'd rather view them in terms of how the market really moves. Okay, so I think I've been able to answer that. Yes, I'm saying confirmation is key. Now, some people don't wait for confirmation. Dr. Stafarian, Baba doesn't have time. Coach Tony doesn't have time. Coach Solomon, they don't have time. But small boys like me, I like to be precise, right? So yes, confirmation is key. This is just added confirmation. Okay. All right. So summarize accumulation and distribution. All right. I'm going to summarize that. Do you always wait for accumulation and distribution before entering a trade? Of course, I do. That's why my trades are very few. All right. So if daily is bullish, will I just go to 1 minute buys immediately? Okay, no, sir. Now let me use this to explain. Now, if daily is bullish, right, where am I supposed to get my buys, right? Higher low. Look for smart money plays, smart money cube, institutional candle, mitigation candle, you know, other blocks, all those good stuffs, right? And then what do? I just wait for price. Once price comes here, I have marked this out. I go to, say, I go to 15 minutes. All right. So on the 15 minutes, I'm just waiting for that lower high, lower low, break of structure on the 15 minutes. All right. Once that happens, I still will not enter. Right. I then wait, because price is fractal. I wait for it again to give me that break of structure. Boom. And I'm entering. That's when I take my trades. Okay. Now, there are times that I may not want to wait for, you know, on that 15 minutes, I may not want to, maybe because I'm having something to do, or there. Once I've seen that break of structure in my POI, I can now then decide to set my limit. And if price just continues in that bearishness, it's nothing. I take my loss, and then what do? I now switch again. This becomes my lower high, lower low. And then, you know, if price now decides to give me that break of structure again, boom, closes above, right? Price is bullish again. I just do that back and forth, because you really cannot move price. All right. So that's how I do it for Mr. Chimeze. All right. At what sessions do we experience AMD? I don't understand what AMD is. Maybe you can shed light. Okay, I notice most times after redistribution or reaccumulation on the lower time frame, price don't come back to retest either our OB or SMC. Now, this is why there's a lot. Now, this is why I told us that smart money buys and sells, once they come into maybe your point of interest, right, and it gives you that redistribution. Okay, now if you are, the way you can view it is, man, how do I explain? Okay, now this whole move right here is what they want to come and mitigate. These orders are in drawdown. So if they come to the OB, the open of that move, and they don't come all the way down, it's still okay for them. If they come to 50%, right, and they don't come all the way down, maybe there's one other block here and they don't come, and they just tap this 50% and continue, is okay for them. They have already mitigated these orders that are in drawdown. All right, they have mitigated it. So that's why sometimes you won't see price come all the way down to your OB or your SMC. Sometimes they just come into 50% of the move, or tap the open and then just rally up on lower time frame. So what will we do when that happens? We are not bothered, because man, there are lots of opportunities. If you don't catch this trade today, you will catch it the next day. All right, so we are not bothered. We just wait. Out of 10 trades in a week, at least you will be able to get at least 2 to 3 trades that you would give you that reaccumulation and redistribution beautifully, come to your entry, get to your TP, at least 3. And if you can get a 1 to 3 in 3 places, 3 trades, 1 to 3 in a week, you are good. You are good. All right. So let's move because of time. Okay, so say you see a break of structure on H4, what time frame do you expect to see, the redistribution or reaccumulation, H4 or lower time frame? Now, 2 things I do is I can either decide to, because like I said, price is fractal. If I see that break of structure on H4, on that same H4, when price is coming to retest, you will still see that bullish structure. So I can decide to wait for it on H4, right? Or go to the lower time frame. If I miss the lower time frame play, I can still wait for that H4 redistribution. And then I'm just waiting. So I can either decide to do it on lower time frame or on that same time frame. This is why some people will tell you that price never really leaves without us, because we know what to look out for. If I miss it on 15 minutes, I look at my H4 structure. Is that bullish, that counter trend structure? Is it forming? If I see it clearly, I will just wait. If I don't see it clearly, I go to my lower time frame and then I just make it easy for myself. All right. Most times, if POI is at H4, then at 5 minutes after seeing a video, most times it hit my SL. Now, this is one thing I must tell us. Do I just see any break of structure anywhere and take it? No, guys. I don't just see any break of structure and take it. All right, that's number 1. Number two is my point of interest must always be from higher time frame. Weekly, daily, H4, 1 hour, 30 minutes. That's where I'm looking out for structure, my POI. 15 minutes and below is purely for entries for me. 15 minutes and below is purely for entries for me. All right. So accumulation and distribution, are they same different trend when there is? Okay, accumulation is when, I explained it when we started the class. Maybe you joined late. Okay, now let's go to this. Now, let me remove all of this, guys. So the beauty of this is you have opportunity to watch this video again and again, because trust me, there's so much to say about this topic, but time would not permit. All right, now this is it. Let me give us this tip. You are looking for distribution above major highs, and you are looking for accumulation below major lows. All right, so now we have this high. This is where I am looking for distribution. All right, get that distribution, then to sell the counter trend down, then buy up. All right, this is distribution here. Now in the bearish structure, okay, when this happens, price will accumulate lower high, lower low, break of structure in bearish structure. accumulation in bearish structure, distribution in bullish structure. All right. So I think I've been able to answer that. Accumulation and distribution are same different trends where. So yeah, that's redistribution here. Now, can you see it here? This is it here, right here. All right. So now this whole thing, I'm going to go over to the chart so that I can really clarify these things, right? So I'm a business person and sometimes I don't have time to check the chart for reaccumulation. Of course, yes, limit orders are fine. But sometimes BS are never retest. What do we do? So because of such experience, some students like me don't wait or we set limits. Okay, so basically, like I said, if price doesn't come back, don't sweat it. Price will give you another opportunity. All right, now let me show something. Let me clear all of this. Okay, so now let's say price came here, you know, and then when it broke structure, it just continued like that and it didn't come back. Now, I'm not going to sweat it. Why? Because I understand structure. What is this? Higher high, higher low, higher high, higher low. Now we have a new higher high. All I just need to wait for is wait for price to come back and give me that higher low, and I continue. There's nothing really to sweat about it. So if you miss it, well, all well and good, beautiful. I just wait. I wait for price to, price would actually come back some point. It's just a matter of when. All right, it's just a matter of when it will, but at some point it will come back. So patience, just identify your structure. If it doesn't come back and it has closed above this high, you know, or your higher time frame, and you now have a higher high, a new higher high, mark out your recent higher low, your range, remember, and then you wait for it again, look for it, price breaks that structure, comes back, and then you are good to go. So at least you will still get those trades. And that's why patience is very important. The market is not rolling. All right. Does it mean we should look out for accumulation and distribution in higher time frame in order to analyze? Okay, so all right, let me go back to the charts, right? So how can you take orders at 50% of the whole move, sir? And how will you play your SL will be large now? Okay. All right, so let's go to charts. Yes, Mr. Emmanuel. Yeah, limit orders are fine. So let's go to synthetic indices. Let's go to synthetic indices. So guys, give me an asset. Give me an asset. Give me an okay. Yeah. I think I remember one. VIX 50. Where are you? All right. Okay, step, VIX 75 honest, VIX 100, step. Okay. Now, VIX 50, this is our higher time frame, daily time frame, right? Now, let me show something. This happened this week. Now, what is this, guys? What do you think happened here? This. Okay, so let me zoom in. We had this higher high, higher low, higher high, right? And then what? We broke structure here. Okay, now price came here. This break of structure, some people might have taken this, it came to this smart money cube, right? But then some people might have taken it, their stops. But then let's see what happened on the lower time frame. at this entire region. So let's see, 15 minutes. Let's see, 15 minutes. Okay. All right, so let's see, 15 minutes. What happened there in the 15 minutes? Okay, so okay, so now can you see what I said, guys? Look at it here. After price broke structure, what happened? Lower low, lower high, lower low, closed above, but the price come back. No. What did it do? Kept on in that bullish structure. Do you see it now? Kept on going in that bullish structure. All right. So now in our 15 minutes, did we really get another break of structure? Did we? Someone could have seen this as this area here. Let me push this a bit. Someone could have seen this as higher high, higher low, price close below here. All right. And then they just came back a bit, came back here. They didn't completely tap this place. But then what did they do? Can you see that bullish structure again? Lower high, lower low, price broke structure. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. And then what? It just continued that way. It just continued that way. Okay. So if I had seen all of this choppiness on the lower time frame, I would have just stayed out because this structure is not really so clear. I don't know if you understand what I'm saying. Like, I really want to see that clear higher high, higher low, higher high break of structure, very clear to the eyes. If I'm seeing all of these choppy movements, I'm not in it. I'm not in for it. So I really want to see that clean and clear price action over here. All right. So this is one example of you having that break of structure that didn't later hold, right? If you waited for that redistribution, you might not have gotten into this trade and then you would have still been safe. All right. So let's check step index, step index. All right. So this is a very, very, very beautiful one right here. So this as lower high, already marked out, lower low, then price structure here. Okay, we mark this out. This entire region was our point of interest. Okay, now let's see what happened in that area on the 15 minutes. Ooh. Just a minute. All right, let's just wait for this to load up. Let me just share my screen again. All right, so let's go back in time and see what happened here. Let's go back in time. Let's see what happened. Okay. All right, so here, when price came here, this is an example. So like I said, price can decide to come back or not, right? Lower high, lower low, price broke structure. But what did it do? It just kept pumping up and didn't come back, right? It just kept pushing up, and didn't come back. So the truth is, you won't always get, price to always come back. All right, now let's look at another example here. Okay, so all right. So let's look at this area. What happened here in this particular area right here? This, what happened? Let's see if we can get that play. Okay. All right. I think seeing this. Okay, so look at this. I mean, this is so beautiful. I mean, this is so beautiful, right? We had this lower low, lower high, lower low, what break of structure. Follow me carefully, guys. Break of structure right here. Okay, now this now becomes what? This whole entire push down, right, becomes my interest area. All right, my point of interest, this entire push down. Now, when price came into this entire push down, what did you see happen? When price was coming back, what did you see? Higher high, higher low, higher high. It broke structure, did what? Retested, and it was giving us what? High, low, lower high, lower low, lower high, lower low. Then price broke structure again, right? And then came back into this place, fill this imbalance nicely. So my entry would have been this imbalance here, 50% of that imbalance. Where is our long and short? So let's just say my entry was here and my stops would be here. Okay. And then that gave me a 1 to 8. Sheesh. I mean, just by marking out your point of interest, going down to the lower time frame, see the first accumulation here, and then I marked out my point of interest again. When price was coming in that bearishness, I waited for another accumulation, boom, and I got in here, and it gave me 1 to 8. If I was risking $10, I would have gotten $80 on this trade. I mean, $80 for the week, bro. You're good, man. You're good, man. Drop some fire emojis if this makes a lot of sense for you now. If this is clear. And then potentially this round like almost a 1 to 11. Sheesh. I mean, guys. So now, did you see how many times we saw some examples that didn't come back? But look at the one example that came back for us. Like this was the one that came back for us, and it gave us $80 if we were risking $10. So let me explain again. Now let's go to the 2 hours. Our point of interest was on the 2 hours, the higher time frame. Okay. Now, So let me explain. Oh, beautiful, right? So let me explain this. We had this break of structure here, right? This break of structure, price closed above, gave us this high, okay, and then came back all the way into this region, all right, and then gave us this push up. Now, when I saw that push up, this point of interest here, there's a liquidity sweep here, right? Let me zoom in. A liquidity sweep, okay, and what do you notice happened here? Lower high, lower low, lower high, lower low, lower high, lower low. Price broke structure again, accumulated. So I knew that this was the last region that price accumulated out of. So this became a point of interest. All right. Now we marked this as our potential area for reaccumulation. And then look at it here. Let's look at this. Let me pick this. So let's go to the 15 minutes. Sorry. So let me remove this. So this was when price initially came in, right? Price broke structure. Okay. So this region, let's just say this last push down. All right. This last push down. Remember, we had that point of interest. Price gave us lower high, lower low, and then continued pushing up. And you were waiting. You didn't get it. All right. Now price came back. Okay. And then on price coming back, what happened here inside of this new area? Let's zoom in so we can see it clearly. So we can see it clearly, very clear. Okay. So this is it right here. Now, let me even show us this again. It's clear here. Lower high, lower low, breakout structure, right? This last down candle, okay. Look at it here. And, liquidity sweep, okay. Right? Institutional candle or mitigation candle, whichever it is you want to call it. And then if you were playing the open of it, let me move this away. So if you were playing the open of this candle, let's just say here, and then your stops was here, this gave you a 1 to 3, right? A 1 to 3, and you were good. All right. If you didn't see that, how else could you have played it? Now, when price gave us that the accumulation, look at what price did here again. Let me remove all of this. Now, remember that this entire move happened, all of this move is happening in our point of interest. Okay, so for instance, peradventure I missed the first one. Okay, now let me show us something. Peradventure you missed this first entry right here. Okay, and then it gave you whether I 1 to 3 or thereabouts. And then, okay, I missed this. What then can I do? Now, price has not, given us that new high, right? Now, I would have just waited for price to come back again into this area here, right? Now, when price came into it, that was when we had this first one. All right. If I still missed that, how else can I have played it? Price was coming back again into this region here. And I know liquidity is still sitting up here. Okay. So I then go to the 15 minutes. And what am I waiting for again? Sorry. What am I waiting for again? I'm waiting for the same thing, right? Lower low, lower high, lower low, and then we had a break of structure here. We had that break of structure. The last push down is where we are interested in, right? So when price came into that last push down, this last push down, what happened? We had lower high, lower low, lower high, lower low, break of structure. Okay. Once it broke structure, now I'm fine. Remember, we still have liquidity sitting up. Okay. Now I would have taken my buy entry at maybe 50% of this imbalance with my stops below here, giving me a 5-point stops, right? And then I'm up 1 to 8. I'm up a 1 to 8. All right. Drop some fire emojis if you understood that. All we are just waiting for is once we get our point of interest on the higher time frame, we mark it out, go to the lower time frame, 15 minutes. Once price is coming back, wait for another break of structure. That's the whole essence of the whole grammar. Wait for another break of structure. And once you have that break of structure, boom, you pull the trigger, and then you're good. You pull the trigger. Okay. So let's check currencies. Let's check USD ZAR. I really like to trade USD ZAR. Okay. All right. So I have all of these markups here. Now, this is, so what do we see? Let me begin from our daily time frame so we can really know how I've been waiting, how long I've been waiting for this guy. Okay. So based on what? Based on structure. Based on structure, right? I had this as, higher low, higher high, and all of that. Okay. Somebody will have said, oh, why didn't you consider it as, higher low, higher high, higher low? Yeah, USDs are, and all of that. But then I like to see it as, this is not structure class, okay? But I like to see it as this, like that. All right, so this was our point of interest and we were waiting. So, and then I went down to the daily time frame, to the 4 hours rather. Inside of my point of interest, what did I have? Lower high, lower low, break of structure. Did I enter? No. Why? Stop loss would be wide. So what did I do? I marked this out as my point of interest. All right, and then let's see what happened there on the 15 minutes. Okay, so this is coming out, zooming so I can see clearly. All right. So here was our point of interest. right? And then look at this area here. Can we see what happened here? Okay, so let me zoom in so we can see. Now, can you see this just has to do with training of your eyes. Okay, now this was lower high. If you switch to line charts, okay, lower high, lower low, all right, and so price broke structure here, price broke structure there. Now what did price do? Price came back. Can you see how price beautifully came back? So let's see if we had our entry here with our stop loss just right here. Come on, if if you cut this on USD, knowing how volatile USD is, right? So because of the wicks, my stops will be, below the wicks. All right. This is like 1 to 7. Now let's go to 1 minute and see if it will be very, very clear on 1 minute. Okay. They're just interested in that area. I hope you have the data. So let's just go back and see what actually happened on the 1 minute. On the 1 minute. I hope you get the data. We do. Okay, let's check the 3 minutes because of time. So this is the last example I will go over because of our time. It's the last example I will go over. Okay, this it. Let me see. Just want to be sure. 10 minutes. Okay, if you still have it backwards. Just a minute, guys. Let's load up and see how we could have played it and have a very, very tiny stop loss. Just hope you get the data. Okay. All right. Okay. All right. Beautiful. Beautiful. So on the 3 minutes, we had our point of interest, right? And then what did we have? Lower high, lower low, right? This imbalance here or this institutional candle would have made sense, okay? And then see how beautifully price came into it, and then it has been pushing up ever since. Okay, so I think I've said a lot. I think I've explained a lot of things here tonight. So please just drop some fire emojis if you understood. If you understood, just drop some fire emojis if this made a lot of sense to you. Don't worry, the video will be dropped, so you have opportunities to watch it over and over again. All right, let's go. So like I said, price may not always come back. Sometimes, oh, the meaning of the X on my chart is just liquidity sweep. That's just it. Just liquidity sweep, guys. Nothing serious. All right. So this is how it's done. This is how it's done. All right. This is how it's done. So just for clarity's sake, let me just do a quick recap of this whole thing. Let me just do a quick recap, okay? So we have higher high, higher low, higher high, break of structure as what? Distribution, all right? And then when price is coming back, you know, coming back to that retest and give us that down move, what is happening here, right? It is expected that what happened here should happen inside here, all right? And what is happening inside here is what we call what? A redistribution, okay? That's what is called a redistribution, guys, all right? And then in the bearish structure, we have the break of structure. We have this as our accumulation. And then when price is coming back here, it is important that what is happening here, right? What happened here should also happen here to give us that evidence. So lower high, lower low, lower high, break of structure should also happen here. This is what we call a reaccumulation. All right, a reaccumulation. And then on the lower time frame, this is what we are looking out for, right? A reaccumulation on the lower time frame, a redistribution on the lower time frame at our point of interest. You know, you can also look out for it on that same time frame, but then it's best to use the lower time frame to reduce your risk and maximize your reward. All right, and then bonus is let me write this down, right? Only look out for distribution above major highs. All right, major highs, and only look out for accumulation below major lows. Okay, only look out for distribution above major highs, meaning that when price gives us the new higher high, it is important that price break structure, right, to now start selling down, come here before we have that again, you know, and we continue like that. So we have higher high, higher low. Okay, all right. This right here is distribution. What is happening inside of here is redistribution. Okay, right? This is accumulation. What is happening inside of here is what? Reaccumulation. So this is how you can even play it. So much so, right? Very structure. Okay. Very structure, lower high, lower low, all right? Accumulation below major lows. These are your major lows, right? You know, we have that. And here, this that happens here is what? Reaccumulation. Okay, and when price comes here, what are you looking for? A redistribution, higher high, higher low, break, boom. When it's coming back, wait for it again, break off structure, and then you can set your limits and boom. Well, don't be surprised, price can just go on dumping, or price can just come back and still continue going in the direction. All right, whichever way, all you just need to do is be flexible enough. We trade what we see, not what we expect, or not what we are hoping. All right, we trade what we see. All right, guys. So this is where I'm going to put a stop to it for tonight. I know I took a lot of your time, but man, if this made a lot of sense, if this has helped you, or if this would help you, or if this has opened your eyes clearly, please, we are 62 on this call. I want to see fire emojis up to up to millions, right? So I don't know if Mr. Havilah is on this call. All right, so let's keep the fire emoji coming. Let's keep it coming. Let's keep it coming. Let's keep it coming. Let's keep it coming. All right, let's go. Let's go. Let's go. Let's go. Sheesh. All right, so is Havilah on this call? Is Havilah still on this call? All right, sir. All right, sir. Okay. Just a minute, sir. Okay. All right, so you're host now, sir. So I'm going to stop sharing now.
Okay, guys, let's give it up to Coach Dami. Let's give it up to Coach Dami. I want to keep seeing that fire emoji in the chat box. Let's give it up to him. Let's celebrate him. Thank you very, very much, sir. Thank you very, very much. I'm on transit, but I was following everything, and that was super amazing. I mean, that was real value over there. And guys, I would like you to just take good advantage of what you're learning from this bootcamp. Like I said the other time, the curriculum were intentionally structured to convert you from amateur forex traders to professional and profitable traders. Please take note of the choice of my words, from amateur traders to professional and profitable, because you can be professional and not be profitable, guys. So we're trying to make you professional and profitable traders. So guys, take good advantage of everything you've been learning from day one. That's why we are not making anything. We're not taking any of the contents on premium. You guys, you have advantage. You have access to all the videos. Go there, go and watch the videos over and over and over again. When I share my results on my WhatsApp status, people ask me, how do you catch this? How do you catch this? How do you catch this? There's no new strategy, guys. There's no new strategy. This is what we do, and this is how we do it. And now you've seen by yourself, you've seen how we catch the snipes. People call me AY snipes. You see how we catch the snipes. You see how we leverage on reaccumulation and redistribution to have a tiny stops and then a big take profit. You can imagine having entry on M1. If you are using a premium trading view, having entry on 1 second time frame, you can imagine the risk to reward and taking profit on H1 or H4. That's crazy, man. That's crazy. No bank can give you interest of that. No company can give you interest of that. So what you're learning from this bootcamp is highly placed premium content, guys. And I wouldn't want you to just the fact that it's free doesn't mean it's cheap, guys. The fact that it's free doesn't mean it's cheap. It's super expensive, but we are just bringing it free for you guys so that you can leverage your needs and take good advantage of it. So guys, tomorrow's class will be super amazing. I will be taking the session personally, and I will be taking you through risk management process. Risk management process, guys. Risk management process. Like I said, you won't just learn how to be professional traders. You're going to learn how to be profitable traders. A lot of traders take profit several times, but in the long run, they are not profitable. You're going to know why it happens to them tomorrow. You're going to see how you can leverage on what you've learned so far to be able to manage your risk, how to build your psychology, because everything we've been teaching you from day one right to this moment If you don't have a good and healthy psychology, you can never do anything with all these things that we've been teaching you. So guys, tomorrow is not a session you can miss. I mean, it's not a session you can miss. I know how much I charge people just for one-on-one session on what I'm going to teach you guys tomorrow. Tomorrow is going to be emotional balance, psychological balance, and risk management. You don't want to miss it, guys. So please, we're going to up on the call 9 p.m. tomorrow, same time, same venue. Share the link to your guys. Share the link to all those that have been hurt, all those that have been battered through investments, all those that have been scammed through forex trading, all those that have blown accounts several times. Let them come over tomorrow. By the time we're done with tomorrow's class, the energy will be there for you guys to start anywhere and anytime. So you guys will see that by the time we're done with tomorrow's class, it will be as if, you know, that born again experience, guys, is gonna be like that, because I know what I'm gonna drop to you for you guys tomorrow. So guys, please don't miss tomorrow for anything. 9 p.m. and then next tomorrow we're gonna be having trade calls and question and answer session. By God's grace, I will try my best to bring all the facilitators around. I will try my best. I'm not saying it's gonna happen, but I will try my best to bring all the facilitators around to have them come together so that they can answer your questions. We're gonna look at the market analysis together. We're gonna check what's happening in the market together. We're gonna give you guys signals for those that are trading live accounts. We're gonna place your trade. You're gonna make cool cash. You're gonna make cool money even from this trade call. And from there, we trust that once you are able to make profit, once you are able to see how we do it live, then it's gonna boost your psychology and your mental balance to be able to trade on your own. So guys, you've learned a lot. If you are really practicing, I want to see your chart markups on the group. I want to see you guys drop your markups. A lot of guys have been dropping their markups. A lot of guys have been placing their trades based on what they've been taught so far. So don't just be learning. Try to practice what you've been doing. So guys, I want to be seeing your chart markups. Whether it's right or it's wrong, drop your chart markups. Let's see how far you've gone. Let's see how far you've learned. And then from there, we're going to take it up. So guys, don't miss tomorrow. Same time, same venue. Good night, and God bless you guys.